Bitcoin has once again captured the world's attention, soaring to a new all-time high of $125,689 on October 5, 2025. This marks the first new peak since August, signaling a powerful wave of buying pressure and renewed confidence in the crypto market. As of Monday morning, Bitcoin was still holding strong near $124,000, showing the rally's momentum wasn't just a weekend fluke. The financial world is taking notice. This isn't just about early adopters anymore. Large institutional players and everyday investors are now part of the ecosystem, driving a fundamental shift in how Bitcoin is viewed. Breaking through previous psychological barriers, Bitcoin's surge is attracting even more interest from the public and media. Rising prices are creating a cycle of increased buying, pushing the asset further into the spotlight. The story behind this record-breaking weekend involves more than just speculation. It's about changing market dynamics and financial products, and a global search for a safe place to store wealth. Understanding these forces is crucial for anyone trying to make sense of today's financial landscape. Bitcoin's new high is more than a number. It's a statement about its growing role in the global economy. The world is watching to see what happens next. A major driver of Bitcoin's surge was the US government shutdown on October 1, 2025, which rattled traditional markets. With key economic data like the non-farm payrolls report cancelled, investors faced uncertainty about the dollar's stability. This triggered a classic flight to safety as people moved money out of traditional assets. Fears of currency debasement pushed investors toward assets not controlled by any government, making Bitcoin especially attractive. In the digital age, Bitcoin has emerged as a new safe haven, immune to direct government actions. As trust in traditional systems wavers, more people are turning to digital alternatives for security. The shutdown became a real-world test of Bitcoin's role as a store of value. The resulting price surge showed that when traditional finance looks shaky, capital flows into crypto. Bitcoin is no longer just a speculative bet. It's increasingly seen as a legitimate way to preserve wealth during turmoil. This event has strengthened the argument for Bitcoin as a global, non-sovereign asset. The financial world is taking note. During this period of uncertainty, both Bitcoin and gold soared to record highs. Gold, the classic safe haven, hit over $3,900 per ounce, proving its enduring appeal. But the simultaneous rise of Bitcoin tells a new story. Investors now have two very different havens, one traditional, one digital. Bitcoin's digital portability and divisibility make it a practical choice in a fast-paced world. Supporters call it digital gold, with a limited supply and transparent public ledger. The rally shows a new generation may prefer digital assets when seeking shelter from market storms. Both assets reaching records signals a large, diverse pool of investors seeking safety. Some split their bets between gold and Bitcoin. Others choose based on comfort with technology. What's clear? Bitcoin has earned its place alongside gold as a serious safe haven contender. The conversation about where to store wealth is changing fast. Another key factor in Bitcoin's rally is the explosive growth of Bitcoin ETFs. These funds make it easy for traditional investors to buy Bitcoin through regular brokerage accounts, no digital wallets required. In the week before the surge, $3.2 billion flowed into 12 major US Bitcoin ETFs, the second highest weekly inflow ever. ETF managers like BlackRock must buy actual Bitcoin to back their shares, directly increasing demand. BlackRock's iShares Bitcoin Trust hit a record $49.8 billion in open interest, showing huge institutional bets. Total open interest across major exchanges and ETFs is now near $80 billion, 10 times higher than early 2024. ETFs have fundamentally changed the market, providing a steady source of buying pressure. They act as a bridge between traditional finance and crypto, legitimizing Bitcoin for mainstream investors. As more capital flows through these products, Bitcoin's price is driven to new heights. The ETF effect is reshaping the landscape for digital assets. With Bitcoin at a record high, everyone's asking, what's next? Analysts like Rachel Lucas see $135,000 as the next resistance, with $150,000 possible if momentum continues. October's historic gains, dubbed Uptober, fuel optimism, but experts warn of risks. Leverage is building with many traders using borrowed money which can amplify both gains and losses. If momentum stalls, forced selling could trigger sharp drops. The options market is skewing bullish, with over 60% of open interest in calls. Bets on further price increases. Derivatives now have a huge influence on Bitcoin's day-to-day price. For everyday investors, this rally signals growing acceptance of digital assets in mainstream finance. Bitcoin is becoming a more common part of portfolios, but new risks come with new opportunities. The line between traditional and digital money is blurring fast. The financial world is changing, and Bitcoin is at the center of it.